Good morning, everyone. Today, let's dive into Australia's financial landscape in 2025, a year brimming with cautious optimism and global uncertainties. First off, the economic growth outlook. The IMF projects a modest growth rate of 1.6% for Australia this year, a downward revision due to a global slowdown and ongoing trade tensions. On the flip side, the Reserve Bank of Australia, or RBA, is a bit more optimistic, forecasting around 2% GDP growth and a gradual recovery. Now, let's talk inflation. It's been a hot topic lately, and for good reason. Despite the RBA cutting the cash rate to 4.10%, their first cut in over 4 years, inflation remains above the target range. This is partly due to the unwinding of cost of living measures. The labor market is showing resilience, though. Unemployment is expected to peak at 4.4% before gradually decreasing. However, wage growth has been slower than anticipated, prompting calls for the RBA to re-evaluate its labor market models. In a pre-election move, the government has rolled out over $17 billion in tax cuts to ease household financial pressures. But don't get too excited. The federal budget is still projected to remain in deficit, with a forecasted shortfall of $46, $9 billion by 2025 to 26. Global dynamics are also at play here. Trade policies under the Trump administration have had ripple effects, with the IMF warning that US tariffs could cost Australia $13 billion annually. These external factors have contributed to the IMF's reduced growth forecast for Australia. So, what does all this mean for you? Australia's financial landscape in April 2025 presents a complex picture. While there are signs of recovery, challenges like inflation, global uncertainties, and fiscal deficits persist. The government's policy responses, including tax cuts and spending initiatives, aim to support growth, but the path forward will require careful navigation of both domestic and international factors. That's it for today's update. Thanks for tuning in, and stay financially savvy.